Welcome back to the Real Estate 401k show, the first show of 2025.
It's weird hearing that.
I know, so weird. So we took off a couple weeks. Sound system doesn't work. Ryan's hearing doesn't work. Justin never has never worked. All right, so we thought we would, and so you're going to want to text the word life to 623 AZ Recon. That's life to 623 AZ Recon. And just a little message for you. If you do text into the show and we call you back, don't hang up on me. You texted into the show.
Yeah.
Yeah, we had that lady. She keeps hanging up on me, and she texted the word hope to 623 AZ Recon. I'm like, you started this.
I know, we didn't. It's not us. We didn't pull your number out of thin air.
All right, you're gonna want to text life to 623 AZ Recon. We have in studio a good friend, Sam Caldwell from Symmetry Financial Group. Area of specialty is life insurance. And Sam, I'll just kick things off. This has been a constant argument over the last, I'm that old now, so 2.5 decades that I've had with my friends about life insurance. I've always been big. I'm a huge fan of life insurance. I think every person should have a life insurance policy. And when I was in my mid to late 20s, getting married, everybody's like, gosh, why do you have so much life insurance? You don't need that much life insurance. And I'm like, well, I have life insurance in case my wife needs to cash in. Mm-hmm. So I don't know. I mean, for me, my philosophy is get as much as you can.
Yeah, so it's interesting. I came into this industry not from a life insurance industry background. And so I had my own reservations coming into this industry, similar to what, you said some people you talk to about life insurance, and you only have to have a phone call or two with people who say, you know what, we're going to think about this, and then a couple months go by, and the wife calls in and says, did my husband end up going forward with that policy? And you say, no, he never called back. And she said, well, he passed last week.
Oh,
See, my biggest fear was a little bit different. I was afraid that if I got it and I was talking back too much to Christine, that I'd mysteriously show up missing,
and she watches all those crime shows. Like if she wanted to off you and get away with it, like my money's on her.
Oh, dude, for sure. But we finally picked up life insurance. Gosh, it must have been 4 or 5 years ago now. And for us, we had concerns about income replacement because our kids were getting a little bit older. We had a little bit more liability and expenses and just kind of things that we had absorbed in our lifetime that we're like, hey, you know what? We don't want to see all of our hard work on these things just go to waste because one of us either got incapacitated or one of us died, and so we've been relying on that as a crutch. Now we did term, and now that we've kind of seen the light, so to speak, we've decided that we need to up our policies a little bit and do something more on the life side. So, Sam, talk to us a little bit about the differences.
So most folks are going to look at term and whole. Okay, term is, kind of like renting a home, where whole is like owning a home.
Okay.
Right? It's permanent. That death benefit is going to pay out no matter what. You could outlive your term policy. In addition, there's a lot of folks who say, well, I have life insurance. And I say, well, tell me about that life insurance. And they say, well, it's offered to me through my work. Mm-hmm. Well, you may not always be employed with your work. And if you were to change jobs, that policy is gone. Maybe your next employer provides it or doesn't provide it. But, term is you can get 20-year terms, 30-year terms. I even have, I'm an independent broker, so I have access to 30 to 40 different carriers, and they're all A-rated, and some, one of my carriers has a 40-year term. It all depends on, what you're using it for. Like you said, is it income replacement? Is it wealth protection? Is it asset protection? Are you looking to diversify and, understanding somebody's income and needs, financial needs, and how they are already currently diversified? helps point us in the direction of term or whole life. And then there's some other products too as well that you can get into, universal life or indexed universal life products as well.
My philosophy was always, obviously, term is a lot cheaper than getting whole life. But I've found as someone gets older, because whole life is for basically until you die. It doesn't really expire, correct?
Correct.
And so term does, whether you get a 20-year term or a 30-year term. If I got the whole life when I was 28 years old, as opposed to getting it when I was 50 years old, I feel like I paid a lot more money by now upping the ante and getting the whole life at 50. If I'd just gotten it at 28, more expensive than term, but it would have been a lot less expensive than what I'm paying now for my annual premium.
Exactly. Your health and your age.
Well, let's not talk about my health, please. I had a rough holiday season.
His doctor watches this, and so we don't need any rats on this.
It's incredible how expensive it does get as you get older, and typically with that come health complications. Not for everybody, but. So I got a 20-year term policy 15 years ago, and I was just talking to Ryan about this. I haven't spoken to the agent that sold me my policy in 20 years.
That's a shame, man.
That's not. I wouldn't even know who to call. So that's a shame. But I'm going to have to do something to replace that here real soon, because 5 years from now, for myself, I'll be 56, and I already know what it's like to try to purchase it at 51. So every year, it's just getting more expensive.
Well, and I think New Year's Day or New Year's Eve, depending on how you look at the clock, I think it was a good reminder. A lot of us think about life insurance in the terms of when I get older and maybe I get cancer or something happens, and I want to make sure my family is taken care of and protected financially. And not to put a somber mood on this, but that horrific terrorist attack in New Orleans on New Year's morning. I mean, it's just a great reminder, because there was a lot of dads there that were young and leaving behind a wife and leaving behind kids. You just don't know, and so I think when you go to bed at night, you have to ask yourself the question, and tell yourself, no one's promised tomorrow. And what happens? What happens to my family? What happens if something horrific outside of the natural course of my eating and drinking occurs to me?
Right. And that's what we talk with our clients about is, if something were to happen, God forbid somebody crossed a double yellow line, what is the plan? And so, for my family, we have a dual income family. So both of us really need protection should the other one not be with us. We're gonna need to come up with some additional income to pay the bills as we currently have them.
Isn't there life insurance policies that will pay you out in the form of basically retirement income as well?
Yeah, when you look at IULs, you can look at some products like that will pay you out in income, and then we have advanced market products that are annuities that you can have some income that you're looking at specifically.
What's the earliest age that you can start drawing on those policies, or is it based on the term of the policy itself?
Yeah, you'd have to look at the term of what product you're talking about, and whether you're talking about annuities or IULs or term policies.
So each one, it's all identified based on specific products. But
yeah, I was just talking to Ryan about our universal life product that we have, where you can start drawing on the cash value that's in there in the first year, but there's going to be charges that are there, so you have to look at when does it make sense to start accessing some of that money that's there.
Yeah, because it's all going to depend on how long you've been paying and how much you've been paying before you're fully vested, that you can start having access to funds before death benefit hits in, right?
Right.
Cool.
All right. Well, we'd like to introduce you to Sam Caldwell from Symmetry Financial Group. I think life insurance is one of the most important decisions that we can make as dads, as moms, and especially those of us that have kids. And we want to introduce you to Sam. All you got to do is text the word life to 623 AZ Recon. That's life to 623 AZ Recon. So Ryan, for me, this may sound a little harsh, and I guess I just want to speak to the dads and the husbands, because I'm not going to put myself in a mother's shoes. But there's two types of men, especially I should say two types of fathers. Fathers that look to the future and want to invest now and protect the financial welfare of the family, or the other one that says, you know what, if I go, it's not my problem anymore.
Yeah, man, and I see an argument on both sides. I see the sexiness of saying, you know what, I want my last check to bounce, and and then I see the other side that's like, you know what, I want to make sure that my family and my kids are set up after or at least have a good shot at success after I'm gone. And for me, it's not necessarily a pride thing. It's more of a I would like to see them be able to do better than me, right? And so I don't want my last check to bounce. I want there to be some runway when I'm good and gone and I become worm food. And so we've done. I mean, if you've been watching the podcast at all, you know that our entire mindset is, let's talk about the future and what happens not just tomorrow, but next year and then 5, 10, 15 years from now. And that's how we posture our investment portfolios with real estate. There comes a point in time, though, that you do need to diversify. And while the majority of our investing has been done with real estate, we've said, okay, what if, right? Then let's have another security blanket there. And so that's why we've decided to start going down the rabbit hole of life insurance, both term and life insurance over the past 5 years. And that's one of our conversations that we had. Our sons play volleyball together, and so we were just at one of the games, and we're just kind of getting into it. And I was like, okay, well, I mean, there's a reason why we're having this conversation, and so let's take it to the next step. And so that's honestly why I wanted to bring you onto the podcast today and kind of just make everyone else aware of what's going on and what I see and what I find to be valuable. But I do want to switch gears a little bit, staying on the insurance side of things, because most people think that life insurance only applies to just life and or a certain period of time or income protection or whatever. But there are also programs out there that protect people for their mortgage. And so I was hoping that you could shed a little bit of light on that to our listeners and what that looks like.
Yeah, so mortgage protection, we typically look at most folks who call are looking for coverage in the event something happened to them for a policy that will pay off the mortgage. And most people are looking at paying off the entire balance of their mortgage. But as we've talked about briefly, your age and your health play into that. So sometimes what the expectation is maybe I have a $600,000 mortgage and I'd like to have that all paid off, and you start running the numbers and it doesn't look like it's going to be affordable. Well, we typically look at full payoff, half payoff, or critical period equity protection. And so that third one, it gets you into an area is if you're older, if you're in your 60s or 70s and the cost of insurance is too high to get a death benefit that would cover the whole mortgage. Well, what is it that we can do with life insurance to protect the surviving spouse or kids? And we can do, enough of a death benefit where you allow your spouse or your beneficiary to grieve the loss of their, spouse for some, many times, many number of years. And during that process, have that mortgage, that monthly mortgage protection paid for some extended period of time. So you're not forced into a situation where the bank is going to take the home, or you have to put it up for sale in a situation where you don't have time to prepare the home and it doesn't get the real equity that's in the home. You have to kind of fire sale the place while you're grieving the loss of your spouse. So we can look at, well, your spouse will be able to stay here for, 24 months or 36 months with the mortgage being paid for.
Let's go off of that first hypothetical. What if I wanted to just have it paid off when I die, and it's $600,000? What happens in the event I refinance the property?
I thought you were going to say if I just rose from the dead 3 days later.
Right,
I'm
yeah.
That'll really screw things up.
That'd be a curveball in the dirt. So what if I refinance and I did a cash out and now it's at $650? Do I have the flexibility with programs like that to basically increase my insurance policy?
So what you would probably do in a situation like that is take out an additional policy for $50K. But I didn't know which direction you were going to go in that, and if it were to be like you'd paid it down and say you didn't die.
That was going to be my next question. Yeah,
you died in 20 years, and you'd paid that mortgage down quite a bit.
Sure.
Well, if you had $200 left to pay on it, it doesn't matter. You're getting the $600,000 death benefit.
Okay.
And your beneficiary will use it for whatever they
So
want
then the
to.
difference would just go back over into the beneficiary's pocket?
Yep.
Now-
It used to be old mortgage protection was an agreement between the insured and the bank. And it used to be that the death benefit went to the bank, but it's not anymore. It goes to the beneficiary.
That's great.
So that's something that's good to clarify, because a lot of times when people hear this, they're like, not down with that at all.
Yeah, for sure.
Now, a lot of these policies are very technical. Does that include the escrows of the mortgage, and if you include taxes and insurance, or is it just strictly principal and interest on the loan for the third option where they were paying up to 3 years of the payment?
Yeah, it can include escrow, absolutely. Just whatever your total monthly is, if it's $2,000 a month.
Yeah.
And that includes your escrow account, and you get a $48,000 face amount. You can stay in the home for 2 years because you'll have $2,000 per month.
It's based on a face amount, though.
Yeah.
Okay.
Yeah.
Okay.
All right, well, let's. I don't want to get too much into the weeds of a specific scenario, but we are in studio with Sam Caldwell from Symmetry Financial Group. Your solution when it comes down to life insurance. I know there's a lot of questions regarding life insurance, and we want to make sure we connect you with Sam. All you got to do is text the word LIFE to 623-AZ-RECON. That's LIFE to 623-AZ-RECON. For a lot of our listeners who haven't dabbled into it, they see those very manipulative commercials, on TV and whatever the case is. What are some of the common myths of life insurance? Like the general public who has not sat down with a broker such as yourself and really have explored it, and maybe have heard rumors from Aunt Ethel and so
Good old Aunt Ethel
from Sun City. What are some of the common myths that people walk around with when it comes down to life insurance?
Wow. I was talking to Ryan about this. One of the things that I think makes me unique to work with is I was a former teacher, right? So I had a 15-year career in teaching. And so when I come into, as an insurance broker, I come more from a teaching background and less of a sales background. So I'm not looking for just selling someone something. I'm looking to understand where their needs are and how I can provide a solution based on what those needs are. So we go through, a lot of, background on the finances and things like that. So with regards to, what are the myths about insurance? I would probably defer those to you. If I come across them, it's typically through,
Gotcha.
We're teaching about what life insurance is, and those myths are, I think we meet those myths, or I meet those myths, and those myths are overcome. I'm not really even sure what all the myths are.
Mm-hmm.
All right, so who you work with matters, and it's like we always say that with the real estate 401k group. We have a lot of investors, a lot of listeners that own 3, 4, 5, 6 homes in their real estate portfolio, And God forbid if something should happen to the major decision maker in that relationship, the other spouse could be left with 5 or 6 homes and don't know what
the hell to do with
what
it.
the hell to do with them, and that's one of the biggest resources and services that we bring. And I think the same thing comes back to life insurance. There's always a .com somewhere out there where you can save a buck and you just pay some money and you get coverage or whatever the case is. You have life insurance in case your spouse needs it. And when people are experiencing the loss of a loved one, especially maybe it's the primary breadwinner in the family, there's so much stress involved, especially if there's kids involved and decisions and things like that. Having somebody that you could pick up the phone to call and who represents you and knows your business and knows what the conversations were like and knows what the intent were, I think go a long way. I think having that, if it costs more money, it doesn't necessarily mean it costs more money, but there's something to it. Like my auto insurance and so forth, and homeowners insurance, I don't care about the gecko. I don't care about saving a buck. I care in case I need it. And something happens, I can pick up the phone and I got an agent say, "Hey, this is what happened, and I'm going to get taken care of."
Yeah, I agree 100%. With like I said about the policy that I took out 20 years ago, I don't even know who sold it to me. I meet once a year with my clients and go through a review of their situation. Things may have changed. We may need to. I don't want anybody to be overinsured. I don't want anyone to be underinsured. So we need to revisit these things throughout the year and provide that customer service. And my base of business is a referral base of business. It's not, call as many people as possible and see what sticks. I really want to be that trusted advisor, and I think that's more than anything else important, that you feel like the person that you're working with is honest and trustworthy and is pointing you in the right direction and has your interest and your financial interest in mind, not mine.
And I think another big light bulb that went off for me, not just with talking with you, but just as I've learned more about life insurance, I always thought that if you chose a policy, like that's the policy that you're stuck with for whether that's that your life or term, and there's just nothing to do about it. If you wanted anything more, you had to get another policy. But what was really cool for me is that a lot of these programs, a lot of these policies, they do have some flexibility. If you're having a rough month, they have different options where you can say, hey, pay a little bit less this month, and then you can bulk it back up during other payments. Or, this isn't quite enough insurance for me. We've taken on more. We've gotten into a better financial position. Let's beef this current policy up a little bit more. I thought that was real eye-opening and pretty darn cool that they allowed that kind of flexibility. So, in each one of them, obviously, there's different margins and whatnot, and that they're going to allow you to do. But it's still nice knowing that you're not stuck with just one thing for the rest of your life.
Yeah, there's quite a bit of different riders that you can add to policies. Some of what you're referring to can be built in to the policy itself, where there's some premium flexibility should you come upon hard times. But other times, if the product doesn't include that, you can get it as a rider in the event that you were out because of illness for an extended period of time from work. You can have a premium forgiveness rider. And so, yeah, there's lots of different things. And that's where having someone that really cares about what is important to you? What do you want? What would you like to see as protection in this policy is much better than someone who's just trying to get into your back pocket.
All right, Sam Caldwell with Symmetry Financial Group. Sam, appreciate you dropping by on our first podcast of 2025. It's a discussion that I have with all of my clients. Especially when they start having kids and start, building a real estate portfolio, the importance of life insurance. And Sam is the guy to talk to. All you got to do is text the word LIFE to 623-AZ-RECON. That's LIFE to 623-AZ-RECON.